Silver, we've known since those August or September peaks back in of last year, and then it did a violent first correction. But since that first violent drop, it's been over the months during that 8 or 9 month correction. It's been doing higher lows on the monthly chart, always above an inclining 1 year, 3 year moving average. No, not showing any sign of weakness other than just a consolidation in price and in time. And right now, I'm zoomed in on the daily chart, and silver has been, since those late March lows, has been climbing up a beautiful channel going upwards, always putting higher lows on the daily chart. And it's right again for the past, since early May, I think it's been testing that 28 level. And I actually, for spot silver, I have a daily close at 28.17 or 28.20. So if we have a daily close above, convincing daily close above that for me is that's going to open the floodgates. I know you might, after that, the daily chart could spill off on the weekly chart. We're much closer, Elijah, to a breakout than a breakdown by any means. So it's just coiling until it just closes above that daily chart. But below important, what I call a wall, so previous support and resistance dating back from that 2011 to 2013 top after that parabolic run in the 2010-11. So once we broke down below that 29 level, man, that becomes ultra over resistance. And right now, just that move is just a layup, bringing you to that breakout line. And then all you have to do is jump and dunk. And once you do that, it's a vacuum. Because we've seen gold do the same type of layup to that same fractal back in last year, below that wall, below that 2011 to 13 top. Gold went all the way there, and once it closed above that wall, I forget exactly what level, for the 6 months after that, it just rocketed to its all-time highs. And technically speaking, this is really what we should expect from silver once we get that close above 29. It doesn't matter how many people are saying, like sometimes I look at the news, silver, it's at 29, it's important. And sometimes you want to take like a contrarian opinion to that. But I think they're right. The technicals are aligned that if we close above that 29 on a daily, weekly, monthly, we get all these closes, especially June above that. We should have a great Q3, Q4 for silver, and it should really drive hard for those all-time highs. I know we're saying everybody's saying that, but is it just the Twitter sphere? Because it's not Elon Musk or like some Michael Saylor or somebody like that's CNBC calling that, right? So I'm always trying to weigh that contrarian sentiment, right? Because it's like everybody's saying, oh, there's no more dollar bears, so the US dollar has to go up. But in the grand scheme of things, technically, if we break out above this 29 there, it's a vacuum all the way up to those all-time highs. And we know how silver is. Then the fear of missing out, as soon as we start getting close to 40 or 50, then CNBC is going to start touting it, talking about it. Then we'll hear some other celebrities getting on the silver train. And that's probably when we'll have a top. Not right now when nobody's talking about silver. It's just right now, Elijah, just as a sweet spot silver. It's not off the lows. It's proven that it wants to go up, but we haven't garnered any real mainstream media attention yet. So it's game on there. The way silver behaves, it traps everybody. So all the fear of missing out crowd, it's gonna start squeezing up, and then we're gonna start having 1% day, 2% days. Day after day, we're gonna get 2-3%. Then people, it's gonna pull back, but it's not. It never pulls back. At the beginning, it pulls back. Once we hit 50, then we're going to have a sharp correction like it always does, and we're probably going to come and retest the 30 level or somewhere close to that. Just like gold did it when it hit 2000, it came and came and retested 1675, almost those quarterly defined highs. So silver, that's pretty much how it behaves. Explodes, traps everybody, violent first correction, and then after that, we're going to start making higher lows slowly. So it could be for 3 months, 6 months. And rinse and repeat. People buying late, they get trapped, and then they say silver sucks. They lose their money on the way down. But definitely there will be a correction. Any parabolic move, especially once you're above all-time highs, there's a price to pay in time and in price. So we got to make sure we keep our emotions in check there once we start hitting 50 there. Because a lot of people be calling, it's guaranteed triple digits at that stage. Like, I have charts for good targets, triple digit, $200, $300 silver. but later on in the decade. But in 2021, 50 is a target and overshoot on smaller time frames. But after that, it will need a breather before doing another leg up there to that triple digit. Gold, I'm pretty sure I had the Q3 target, so sometimes I have to refresh the charts because time moves on and I have to add months. But I have Q3 for gold is definitely it's going to be it's a shining moment, and it will do break its all-time highs. It's right now it's angling to do that, and it's going to be like silver, the same thing. So once gold goes at 2200, 2250 or 23, wherever, it might overshoot, and then we're going to start calling for 3000 gold, and we're going to have the charts to tell us how far we are away from the moving average. If we're too stretched, then and especially if we start hearing around us like people calling for those insane targets for gold, then we could expect maybe a correction or a pullback, and that would actually be healthy. But we don't want to go parabolic just yet, because the damage is, we've seen it, let's say in the Bitcoin charts or NASDAQ and the dot-com bubbles. If you go parabolic and then you correct, like let's say 70%, man, that creates so much damage that you need like a multiple of 3 to 8 times in length, that time of that bubble to go up and down, multiplied that like by 3 to 8 times in time just to heal from that. So as long as we go up, but we don't over exaggerate the move to the upside, this thing, as long as we're above like a 3-year inclining moving average, this thing should ride on towards the end of the decade.
And why is that so concerning when we do see that parabolic move, and why does it take so long to recover from that?
I try to do analogy to human emotions. It's like kids when they're young, they can't manage their emotions, so everything's so intense. They go up, and then after that, the slightest deception, and then they crash down. And then when they try to get back higher, they're kind of burnt by, they remember if they went too high, then after that, they might crash down until it evens out slowly. And once you're perfectly balanced and like you're numb, then, okay, maybe I will do that thing that was dangerous, that gave me a crazy high, but at the same time could make me crash down. So eventually, that's why you can't get stretched to the moon, right? Eventually, people are going to start taking profits. People have different metrics. The valuation's too expensive, or for whatever reason. Then that starts also naturally creating some resistance. And if they start selling, the price goes down, people get trapped, and then it starts tumbling downwards. But usually the people that entered early in a trend, they're the ones that are going to sell properly close to the top. And whoever bought close to the top, they'll get trapped. And so for that clear skies ahead, it's true. But eventually you have to remember, people bought low, and they're going to, when they did 10x, they're going to want to take profits, right? So they're going to be sellers, those guys there, much higher up.